So we are going to go ahead and get things started for our July monthly meetup. It is the end of July here. And so this is the, uh, making apartment building and apartment investing your plan B. And we're glad to be here this evening. And right now we've got Patty Klask with us, and she is a CRNA in Michigan. And we're just going to kind of shoot things back and forth. And so, Patty, we were discussing before we started recording about your, different real estate experience and stuff. So you mentioned that you've had, you've kicked around the idea of building some properties and things like that. So how
Yep.
far along that process had you gotten?
Well, we were actually looking for land,
Okay.
um,
Okay.
and, kind of just looking in the area that we were building. And originally we had thought we would build a place with our daughter, and when she decided to come across the state and live on our side.
Mm-hmm.
And then we started seeing the real estate prices, and we realized that this was going to have to be put on hold because land prices in um, Southwest Florida are just off the charts.
Mm-hmm. Well, and so that's one of the things that I think has changed a little bit recently. So when I first started this whole thing, most apartment offerings start off at $50,000 minimum investment. And so that can, you can often get a decent rental property for much less than that. When you're using leverage and things like that, you figure if you're doing a 25% down payment, plus a little extra, maybe you spend, $25,000 to $30,000 on what amounts to be about $100,000 rental home. But what you're finding now is that those homes are becoming fewer and farther between, and particularly in some of these high growth areas.
Right.
It's hard to get a home for a decent price. You have to come to the table with more capital. And so you figure if, you're looking at a duplex somewhere and it's a $400,000 duplex. Well, now you've got to come to the table with $100,000.
Right.
And then you've got to maybe have some extra cash on hand for the banks to satisfy what they want, and to have enough for any repairs and things like that. So right now I'm finding that more people are looking into apartment investing because the barrier to entry is actually getting to be lower than that of getting into some single family rentals. And of course, that's not everywhere. But in a lot of places that people live and want to invest, that is the case. So, and it seems like you've had that experience in Florida, and Florida is just one of those hotbeds. I mean, in so many different areas.
Yeah.
Um,
Hmm.
so yeah. So do you have past experience with rental properties as well?
We do. We owned several in Michigan,
Okay.
and um, really just about the last we sold the last one. See, we've been married 35 years, so probably about 20 years ago we sold the last one. So
Okay.
um, kind of got out of that when the kids got into high school and college. We didn't have as much time. So
Yeah.
um, we have some experience with being landlords and
Hmm.
and repair and owning several homes at once. And then we also did the vacation rental with our home in Florida. We did rent it out as a vacation rental.
Okay. So were you doing it kind of year round, or just, I mean, I guess
No,
you guys were there for part of that time, right?
yeah, we had a couple. We used a management company at one point, and then we were pretty disgusted with them,
Mm,
and we just called the tenants directly and said, hey, we'll rent to you for this. We had no contract with that rental company. Um, and so we just rented to them every year for 10 years, 15 years. So
oh, that's nice.
yeah, that was nice. And then if, we had some of my CRNA friends would go down, and I actually had one of the doctors I worked with
Hmm.
moved to Cape Coral and rented my home for several months. while he looked for one. So
Oh, okay. Well, that's
it was
cool.
kind of a nice little.
Yeah. But yeah, so with the self-managing, how much time did that take up for you? Like you said we had time and then we didn't with our kids getting a little bit older. How much time
Well,
did you find you were spending on some of those rental properties or
with the
not?
one rental property, I did that before we did that before I even went to nursing school, and
Okay.
it was a pretty timely investment,
Mm-hmm.
with repairs and rent and finding tenants and all the maintenance. It was,
Mm-hmm.
I'd say 10 hours a week. Um,
Okay.
the one in Florida was pretty easy. That was,
Yeah.
we had some good friends that lived across the canal that would help us out a lot, and um, so that one wasn't. We didn't spend much time on that at all. But I don't know that we um, would mind the time, just depending on what our work situation is once we get down there.
Yeah. Yeah. And that's understandable. There are people who really enjoy getting into that too. It gives them something to do. It just really depends on what you want and how many it's somewhat about the systems you can put in place as well, you know. And of course the tenants, if you've got tenants that are in place, as you mentioned, some of them were in place for like 10 years.
Yeah.
Well, that's obviously a pretty good tenant. The one question I had though for you, when you say that you have a tenant for that long, sometimes you're able to keep tenants for that long because you're not really raising rental prices on them. So how did that work with the rental market shifting around them? Did you guys just kind of keep the price pretty similar? Did you have it
Well, we
on
did,
a rate
because
plan?
that we went into at the end of that was into the downturn of
Okay,
the real estate market.
makes
So
sense.
yeah, we really pretty much, and they honestly took better care of the house than we would. Uh,
Gotcha.
we didn't know there was, certain things in the southern homes. They're like, there's filters in all these vents. We're like, no, we don't have filters on our vents up here. And Frank would just change them. He was a good guy,
Oh, that's
and
nice.
they were really good people. So no, we never really raised the rents
Okay.
at all for them.
Well, and really, I mean, as long as you can cover your expenses and make a little bit off of it, then a lot of times that makes sense because you have a tenant that is taking care of the property and that you know
Yeah,
them
and
well.
winter rentals in Florida are pretty lucrative anyways.
Yeah.
So
Yeah. Very true. Very true. That's my dad and stepmom go down there every, like January 1st
yep,
and they stay through the end of spring.
my parents did the
So,
same thing. So
yeah. A lot of people like to do that. So we're in North Carolina here. We're known as, we've got a lot of halfbacks, people that came down from New York to Florida and then they made it halfway back. So got a lot of halfbacks,
yeah.
but yeah, so you're on here because you're interested in finding out more about apartment investing. So what kind of questions do you have for me? What would you like to know more about?
So I guess, how did you find and what constitutes a good investment?
Okay. So the the way that I found well, first of all, I had to learn about apartment investing. I had to figure out that was something that I could invest in as an individual, and that was something I learned through listening to podcasts. So, first heard about it listening to the Bigger Pockets podcast. They had a fellow on by the name of Michael Blanc, and he has his own podcast, but he's an apartment investor, apartment syndicator, and so I decided, okay, well, I like this guy. Let me listen to what he's doing, and so I started listening to his podcast,
Mm-hmm.
and then he had a fellow on that show by the name of Ryan McKenna, and Ryan McKenna is the head of McKenna Capital, and he talked about, wow, it's really great. Oh, there's Angel. It's really great to be active in investing, but for most people, that just doesn't make sense. So why not be more passive? If you're a working professional, it makes sense to just be more passive.
Sure.
And so he talked about how, his job is, kind of matching up investors and good operators. And so that's what I decided on. Hey, Angel. So, and that's essentially what I do is I network with different operators and bring their deals to investors, potential investors. And so it's kind of a matching up process there.
Okay.
So I was able to find good operators by plugging myself into some of these networks. And that's how I did it. It was by talking to people. You get to know the people that are that are progressing, that are consistently having deal flow. A lot of it is about the relationships that they have with brokers, because most of these apartment offerings are done off market. And that's just the reality of it. If you go onto a site like LoopNet and you see a deal, it's because nobody else has taken that deal. And and there's probably something going on with it that you may not want to take. Now, and you think about it too, like some of the, I think you're in the real estate investors Facebook group and stuff.
Yeah.
So you will have seen that certain times people will put out deals out there, hey, I've got, a little multifamily here or something like that. Well, those are deals that maybe, are still off market, and they're just trying to find somebody to take it so that they don't have to go through the process of listing it.
Gotcha.
And so it's the relationships that lead to some of those offerings. And when you have those relationships with the brokers, a lot of times you can figure out, okay, well, the broker's, showing me this deal, but you know what, you tell them what you want. Okay, well, you showed me this deal. It's 100 unit. I don't like the area. I'm looking, this is a C class property. I'm really looking for more of a B class. And then they can say, well, you know what? I had somebody that's talking to me last week, and they're talking about selling their property, and it's located over here. And so let me go find out some more information. And then all of a sudden you're in a conversation about this other deal that you didn't even know existed.
Gotcha.
So that's how a lot of these deals can happen. So it's about having basically in a syndication, there are different roles for the different people in the business. So you've got your folks that are more of the deal finders. They have those relationships with the brokers. They're constantly in contact with people in different markets. So they're finding out these deals. You've got your underwriters. These are the people who will take a potential deal and they will analyze it from a numbers perspective. They'll put it into their Excel sheets and they will go through the numbers, and they examine hundreds and hundreds of deals, potential offerings. Right. And they have their own criteria. They know what their team can accomplish. And so they use what they know about their team to set up proper underwriting, properly conservative underwriting. Then you have the asset management piece. So these are the people who take care of, the kind of, I don't want to say the day-to-day operations, because normally you have a property manager that takes care of that. You would hire on a property manager, but the asset management is more about the communication with the syndicators and that property management, and making sure that renovations are happening on time. What's going on with any, like I say, a roof repair or whatever. Hey, we've got 10 units down. What does our lease up look like? What, right. Where are we coming from in that perspective? Where can we improve systems? Let's talk about, setting up something that, get the tenants to pay for their own water. And that way, because when they're not paying for their own water, then they're using a heck of a lot of it.
Right. Right.
So it's all things like that can really make a difference. And then, of course, you've got the people who, your people who are the deal finders are oftentimes in contact with brokers, and the brokers will come to them with somebody who wants to buy their property potentially. Once you get that property up to a certain level, you're going to have interested buyers. So gotcha. That's where, a lot of these things can come into play. But that's essentially your structure of your syndication team.
Okay.
right? And so the thing about apartment investing that I really, really like is, first off, I like to invest with great operators, because you want people who care about what they're doing, and you want people who care about the people that they're helping, right?
Right.
Everybody hears about the scummy landlords and stuff like that. I don't work with people like that. I'm not looking to make a quick buck. I want operators who want to come in and really make a property better, make a community better by lifting up this property. And so when you have an operating team that can come in and make all of these improvements, they're improving the lives of the residents that live there. Those residents now want to be like the folks that you had, and they want to stay there long term, because they see, wow, the things are improving here. This is going
Right.
great,
Right.
and this is a community I can raise a kid, or be a part of a real community here, Um, so things improve for the residents. Things also improve for investors, because you're able to meet the business plan. You're able to raise rents in a proper fashion, not overly raising them just to make a buck, but stepwise fashion. Hey, you know what? You've got these new units that are newly renovated, so you find new residents to fill them, or you can help, you know, your older residents find a way into those new units and just
Sure.
pay a little bit more, because they want to stay and they want a newer unit. It looks great. Why
Right.
wouldn't you? So you're helping out your investors because you're making more cash on the apartments. And then you're also helping out the general partnership, the syndicators themselves, because they have incentives in place that, hey, if we're doing really well, then we're going to get profit too off of this. So it's really just a win-win-win scenario for this.
Okay.
um and that's why I like it. That's a big part of why it appealed to me.
Gotcha.
So, but I
What
hope that answers your question about how
Yeah,
people,
no,
find deals and stuff.
it does. What was your initial investment that you made?
Because of my situation, which we kind of talked about a little bit earlier,
Yeah.
with my daughter, basically, I like to joke and say that she was kicked out of preschool,
Preschool?
but no, it wasn't her fault, and it totally had to do with the hospital system and everything else. But because of that situation, my wife and I got together and we said, well, okay, the first one we can make a bigger investment, because we feel comfortable with everything going on, and it's still such, it's not this significant amount compared to our portfolio.
Right.
So we invested $115,000 in our first deal.
Okay.
We have not invested that amount since in another deal. We have invested $100,000 in another deal. We've also invested, 50 in one, 75 in another. So, it just depends on the deal, and how much
Sure.
exposure I want to, the not just the markets, but also maybe the operators. If I have any questions about the operators, maybe I won't invest as much with them.
Gotcha.
So it just depends on what you want. So, and I also, with the 50 and 75, I also was already exposed to Southeastern markets. So I was like, well, I'm not going to put as much into that, because I'd like to be exposed to other markets as well. And
Gotcha.
so I had another deal later on come out in Idaho that I went into a little bit bigger, just to further diversify.
Great.
So, but as far as being able to tell what's a good deal and what's not, so there are different factors you can look at. A basic deal comes out, and the returns for investors that you kind of expect to see is, you're looking for something that is in the 5 to 7 year time frame. That's the ideal, or that's the norm. Okay, sometimes you get less, sometimes you get more, but
Okay.
typically 5 to 7 years. And you'll get something between 6 to 8% of, basically distributions that you'll get back in cash on that property.
Okay.
So, whether that's on a monthly or quarterly basis, but it's 6 to 8% per year. And then you're expecting overall returns that basically double your money in that time frame.
Okay.
So, you know, if you're talking about a 5-year time frame, that comes out to about 14 to 15%. Okay.
Okay.
Or if you're looking at an equity multiple, a 2x.
Okay.
So that's what you're looking at. And that's kind of what you might expect going into a deal. Now, what you have to look at is where most of your money's coming from. So you might have a deal that is heavier. It's a heavier lift. It's a heavier renovation project.
Okay.
So in that sense, if it's more of a kind of a fix and flip, then you're looking to get more money on the sale. And
Yeah.
that's where the bulk of your returns are really going to come from. Whereas some projects are more evenly distributed. You
Okay.
might get, your 8% returns per year, and then the rest of those returns on the back end on the sale, but that it comes out to like 16% per year.
Sure.
So it ended up being half and half essentially. So it depends on really what you're looking for as an investor and what that operating team can and has accomplished in the past. So, it's something. If you've got an operator who has done 3 or 4 deals in C-class properties, and they've dealt with 50 unit properties, and all of a sudden they're pitching you on a 200 unit class A property in a really great area, I would have some hesitation, because what's their experience with a class A property? They really haven't done that. They know how to do the heavier fix and flip. So do they know what it takes to have the right amenities for class A,
Okay.
to implement those kinds of things? So, and vice versa. If you've got a team that's basically been working in class A and all of a sudden they want to work with a class C property, well, are they going to try to put in all these amenities that class C people don't care about and can't pay for? Are they going to try to raise rents to a certain level that's not right for that property? So there's all kinds of little nuances and things like that can really go into it. But that's where, I like to say that's where I come in, and I'm able to say, what, look, I'm going to help you out. Because that the deals that I'm putting forward are deals that I've already vetted, and I know these operators. I've worked with them, or I know their track record and I trust them. We've developed certain relationships, and I know that the people that I work with, they know what they're talking about. They know what they're doing.
Gotcha.
So, and Angel, you are being so quiet. I'm just not used to this. It must be dinner time. Oh, she's gonna find that mute button here in a second. Yeah, go ahead, Patty.
What's the risk in all this? I mean,
so the ultimate risk is that if you invest $50,000 in an investment, you could lose it all.
Okay,
that's the risk. But realistically speaking, you're investing in real property. So let's say that there's a fire on a property or something like that. Well, your team should have insurance to cover that. So most of the time, you're going to have a situation where, if something happens, then the insurance kicks in, your returns might be delayed.
Okay.
And you may just get back what you put in. You may make no money at all. It's a pretty rare thing to end up really substantially losing money on an investment. So,
I did meet a guy the other day. He calls himself a serial passive investor.
Mm-hmm.
He's done 50, and he did say he's had a couple go negative.
Yeah. And it does happen.
But that's 52 deals. He said 52 deals, 12 full cycle.
Wow. Yeah. Wow. That's cool.
He doesn't work.
I'm going to be a serial passive investor one day.
He's 50. So that means if 12 of them went full circle. So what is that? That's 38 of them currently running.
Wow.
40. But yeah. Still, that's a lot to keep up with. But that's a lot to also be getting kickbacks from.
Yeah. Well, he's got like a binder that he carries around to meetups
Oh, that's cool.
of all his stuff.
I need
Wow.
to start doing that. Just having 6 is like, oh, somebody asked me the other day, oh, how many units do you have in that one product? I don't remember. It's like 200 something. It's just not something like that's the thing about passive investing is like, I don't have to worry about it. It doesn't matter because the paychecks keep coming and I can focus on other things.
I don't even check the balance on that account.
Yeah.
Really?
Mhm.
What's your time commitment per week?
On a passive investment,
Yeah,
0.
really? So
Yep.
that you just, that's,
Basically, so I get a statement every month on the
Gotcha.
properties. So I'll read that email.
okay,
And that's my time commitment. So you figure if the time it takes to read 6 emails,
gotcha.
and unless there's something big going on, like you just kind of look at maybe a trend line, like, hey, you know what, last month's occupancy was this month's is that, here it is, maybe year over year, stuff like that.
And honestly, he sounds way more involved than me, because once I've read a couple of good ones and you've shown me that you know what you're doing, I'm probably not going to read your emails anymore.
Yeah.
I'm just going to make sure they're coming.
Gotcha.
I want to know that you are communicating with me, whether or not I open them or not. And like I said that to one guy and he's like, Angel, I know you don't read my emails. I'm like, I don't have to anymore.
Yeah.
Right.
Yeah.
Because like, even when the stuff was hitting the fan with the pandemic, they had to delay, a distribution. Well, they were communicating the whole time about what was going on. And they did catch it up. So we did catch up to it and they paid it and then we caught up. But it was, they were just the whole time. They were very, very open with what was going on. They were communicating. It was, I don't have to read the emails anymore.
Awesome.
Because I know that they're communicating. I know that they're doing the best they can.
Gotcha.
But anyway, yeah. So Patty, I hope that answers your question about the, the time commitment involved. When I say passive, I mean,
You really passive.
really passive. Like,
It's literal mailbox money.
It is.
Wow.
I check my bank account. That's what I check, And
Awesome.
no problem. Like a lot of people ask, well, how did the pandemic affect things? It didn't, because we invest with good operators and they know what they're doing and they take care of the residents, and that's, they work with the residents when they have trouble paying. They're working with them because,
Gotcha.
A partial payment's better than no payment at all.
Right.
And you can also provide incentives to people, say, hey, if you pay on time by this time period, if you pay early, then, hey, we'll give you a $50 Amazon gift card.
Right.
That's an incentive for people to want to pay. And what a lot of people don't understand is that people want to pay. People are good people. They want to pay for their rent. And that can become a little more dicey if you're talking about like D-class properties. But if you're talking about the working class B and C properties, and A-class properties as well, like people want to pay their rent. They're not bad people in these places. That's been something that's just been completely overblown as like, oh, all these freeloaders and getting their rent for free and all this stuff, and as a landlord, one of the tools in your tool belt is an eviction threat, but it's not like you want to use that all the time. And it's not something you're looking to do. Hopefully the operators that you have in place have screened residents when they're having them sign their contracts, and they do a good job with that. So,
Right.
But anyway, so what else you got for me, Patty?
I think you've answered all my questions. I think I have a lot of research to do.
Okay. That's cool.
But,
are you on my email list by chance?
Yes.
Okay.
Yes.
Okay.
Yeah.
So, I didn't happen to check before we got on, but
I think so. Cause that's where, I am. Cause that's where I jumped onto this from.
Okay. Okay. Cool. Cause, I just want to make sure we're going to, obviously be, that's where the deals that I have available come out, and I'm hopeful to have something this fall. And and have something for investors. Yeah, I know Angel's looking around and maybe.
Cool. Well, when I jump off here, I'll make sure that I send it, that I reply, and make sure you have my email then.
Sure. And
Oh.
I was gonna say I'm gonna check real quick. I'm just gonna look in here, but yeah. So Angel, feel free to introduce yourself. We haven't done that part yet.
Yeah, so I am Angel Williams. I'm the face of our educational platform. It's the Academy Presents Real Estate Investing Rocks. We are real estate investors. My husband and I both grew up in families that invested in real estate, so it was a really natural progression for us. We bought our first house in 2003, knowing that it would be our first rental. Like, we didn't even have to discuss it. We just knew.
Right.
My husband finished his doctorate in 2006, and it became our first rental in 2007.
Wow.
So we came from the residential side. We've actually got 5 single families, a quad, and a couple of duplexes. So we are residential people. And then we had a special needs son, and we realized we needed something that was going to scale faster. And so we got into multifamily.
Awesome.
So,
great.
yeah,
That
it allows for you to plan for bigger things.
Yeah. We bought our first rental in 86.
Oh, wow.
And it was a duplex. We lived in it and let it pay for our rent. We bought another house and kept it. And then we sold both those homes and moved out in the country. And we built a house in Florida and used it kind of as a vacation rental. So
how did you know how to house hack in 86? Were people already talking about it?
No, that's when we got married. That was our first home when we got married.
But I mean, how did you know how to do that? Like, somebody just said, nobody told you, you just did it?
Oh, my husband's father had done the same thing when they got married 25 years before that.
Oh, wow.
And my mother was a realtor at one time. So we had a lot of assistants that young. So we were pretty lucky that we got led in the right direction.
That's how I feel too. So that was why I was like, holy night, how'd you figure that out?
Yeah, well, we were very lucky. We had great parents. So that was kind of nice. And that's Greg's dad, boy, they kept theirs almost their whole lives. They didn't sell it until we were married. So and then we sold both, used the proceeds, and built out in the country. So
like, I don't think we'll ever sell our residential stuff, because we've cash out refied it so many times that none of our money is in it anymore. So it's infinite returns.
Yeah. We are, as a matter of fact, that original rental that we bought has been demolished. So it no longer lives.
I'm sorry.
I think we got out at a good time.
Did the area just not, the area didn't pan out, or?
It changed. It changed pretty rapidly.
Yeah.
So that's kind of when we kind of got moved out. And it was an old house. It was built in 1920s, I think.
Oh, wow.
Yeah, 1920s. So
real estate, I mean, it can last a long time, but that's asking a lot.
Yeah. So it was good.
Cool.
But this sounds like a whole lot more fun.
I've enjoyed it. It's really a pretty cool way to invest, and you can also do it with your retirement accounts too. That's something that a lot of people don't know. You can use your IRAs, your 401ks to do this kind of stuff, so long as you have a self-directed account.
Yeah.
And so, which is different from like a solo 401k or a self-employed account.
Right.
You have to go through a different custodian. So it's like, you have your 401k that's set up with E-Trade. You would also have a 401k that's set up with a different custodian who allows you to invest in real estate.
Right.
So, which I do have information about that on the YouTube channel for On Call Capital. So if you just, go to the YouTube channel now.
Be great.
Yeah.
Awesome.
So, and anytime you got a question or anything like that, just, feel free to reach out to me. You can email me back or just get a hold of me on Facebook or something. I'm all over the place. So
cool. Thank you so much. I really appreciate all the information. This was really interesting.
Absolutely. Yeah. It's my pleasure. Yeah, Angel here, she is a syndicator as well. So that's, it's always fun to have somebody on here who has some experience as well. And we can kind of bounce things off of each other.
I have
So
passive experience.
yeah. Aspiring
Well,
syndicator.
I think we're gonna get at least one of the ones we put the LOI on today. I really think
Cool.
we are.
That's fun.
The scary part is the money that's going hard.
Yeah.
Because if it turns out that both of them are awarded to us, that's like, I don't even know. It's scary to even think. It was like $400,000.
Yeah. That you
And
have to come to the deal with. Yeah.
Wow.
yeah.
So that's where, I mean, the beauty of syndication is that, you are working with investors who you can pool that money together to buy such a great asset, but it is a daunting thing for, the syndicators themselves to come to the table.
You've got some investors that want to, like, or even on the GP side, that want to invest with you and they want to invest in the deal, but they do not want their funds on, they don't want their funds to go hard because they don't want to lose their money if the deal goes south.
Mhm.
And so I'm going to put this out there. There is an absolute niche for people that are willing to loan those funds. And I know a lot of people and I'm having a hard time.
Yeah.
I believe I can do it, but it's going to take some work.
Wow.
But you want to find though people that are willing to do that work though too. So
yeah.
But there is more risk in that front end part because there are a lot of steps along the way that could go sideways on something. So typically the time that you're really fundraising for a deal is after you've already done this part of it. And then you need to secure the rest of the funds to actually make the purchase. So yeah.
And this part's the nerve-wracking part. It's like my husband texted me today and he was like, holy crap, the taxes are going to increase double next year. I was like, what? He's like, yeah. And he's like, it's going to kill the deal. And I'm just like, this is all I've been doing for 4 weeks. And you're telling me in a matter of an hour or two, something's gone this bad. I was so angry. And I'm at a meetup reading these things. And people are like, whoa, I've never seen you this quiet. Kind of like what you did.
Yeah.
And I'm just like, I am so angry right now.
Wow.
I mean, you pour into it. And and it like what Bobby was saying is like, it's not about the bottom line. It's about, that's, 200 and something people that I get to change their living environment. And I get to work to create the best living arrangement that I can at that price point and figure out what I can do to make the numbers work together. Like, it's like a puzzle.
Yeah.
Like,
right.
What pieces can I put together to bring together the best amenities and the best environment I can, given this price point?
Yeah.
And so it's literally like a game. I don't know. And it's really cool to know that you're able to help that many people. And so
one of the places I'm invested in, they had just a vacant field. And so the syndicators came in, the operators, and they said, well, these kids are having to go down the street and across the street, busy street, to go play at a playground. We'll just put in a playground here.
Oh, wow.
And so that's what they did. They were able to get playground equipment, and they got it on the cheap too. They got a bigger model than they were anticipating because they got it used, like very gently used. It was ordered for another project and then not actually used at all for that project. And so they got it on the cheap. And now it's like one of those finishing touches, for that property. And the residents are so happy about it. So, and that's the kind of stuff you want to be a part of.
Yeah. Yeah, for sure.
So, but,
all right. Well, I'm gonna run and first thing I want to do is make sure I get back on your email.
Okay.
And talk this over with the husband. And I like I said, I think I've got some homework to do.
Okay. Yeah, that's fair. And I'm here to help you out with any of that. So feel free to reach out at any time you have questions, because in the beginning you just don't know what to ask a lot of times. So
well, that's what I mean. I had a few basic questions and now I have 100 and
That's what email's for.
Exactly. I'm sure you'll be getting one soon.
Cool. Hey, I'm here
All
for
right.
it. So great
Thank
to talk
both
to you,
so
Patty.
much. All right. Thanks so much.
Absolutely.
Bye-bye.
We'll see ya. Thank you so much for joining me for another episode of the Plan B CRNA podcast. If you haven't already subscribed and reviewed the show, I'd be honored if you took the extra time. It really helps to expand our reach and get the word out about the show. If you're a CRNA who is interested in sharing your story on our podcast, I'd love to have you. Please email me at bobby@oncallinvestments.com for more information. This episode was brought to you by On-Call Capital. They are dedicated to helping providers like you develop passive income and generational wealth through investments in the apartment and alternative investment spaces. Feel free to check out their website at www.oncallinvestments.com and subscribe to their free educational email series. You can find On-Call Capital on Facebook, Instagram, and Twitter. You can also check out our YouTube page, where you'll find all of the show episodes along with other educational videos. Thanks for listening, and we'll see you on the next episode.